You go, girl.
Good morning, everyone. This is Mortgage Pros 411. I'm Audrey Boyce-No with Kevin Casey, and today we are joined by Rob Chrisman. So you will note that for the first time in weeks, Kevin is back.
I
Welcome home, Kevin. Good God. But although we thought you were traveling a lot, you've got nothing over Rob Chrisman, who has flown.
Wait a minute,
You
wait a
ready
minute.
for
Where
this?
Kevin? Where was Kevin? Where was
No,
Kevin?
no, hang on. I'm in charge of
Ireland?
this. You just pipe down for 1 minute. Rob Chrisman has flown 43,270 miles in the last month. And yes, he added them up. So let's start with you, Rob. Where on earth have you been?
Um, where have I been? Australia, Indonesia, Bay Area, Manhattan, Spain, Portugal, and then flying through Istanbul to get back here day before yesterday.
Oh my God, I
Actually,
almost
I'm
did that
sorry,
last year.
yesterday.
Last
Yesterday.
night. Last night. Late. You were texting me as you were coming
Oh,
off
then
an
I went. I'm
airplane.
sorry. I'm sorry. Went to San Juan Capistrano in Southern California for an Accelerate event.
Well, that's
So,
it. At
but I
least
want to
another
know where Kevin was.
342 miles.
Kevin, where have you been?
Well, it's funny, Rob, because Kevin, if we go back to the beginning of the year, he too has been to
name off half
Australia.
those places also.
Yeah,
Melbourne, went to New York, Manhattan, Florida. Spent a whole day in Atlanta Airport. That was a fun day.
that doesn't count. You didn't leave the airport. Keep
Airports don't
going.
count though, huh? Then
No.
Portland, then London, Ireland, then Yosemite, and somehow I got LA thrown in a couple times in there too.
Yeah.
Wow.
All right. I know. I know. All
And
right.
people
Well,
ask me when am I going to retire, and I'm like, why?
yeah. So we got some jet setters here, so that's something.
So let me say this about that, Kevin. So when I was at RPM
Oh,
way
I
back
remember
when,
that.
the number one loan officer, Joe Polizzi, spent a year working in Italy, or I should say, living in Italy
Yeah.
and working from Italy. He had a team in the Bay Area, but Joe just shifted his hours a little bit, and the work day for him started around 4 or 5 in the afternoon and
Uh-huh.
went until midnight or 1 o'clock, and then he went to bed.
Yep.
It all
That
worked out really well.
I
Yeah,
remember that
England
with
works.
him, and he was ahead of his time because he was doing this before this, was more normal than it is now. But that's one of the great things about Europe is the West Coast doesn't open up until, 4 or 5 o'clock in the afternoon there, so you can go have fun all day. And yeah, it's good.
Yeah, except
What were
you
Yeah,
you gonna say?
early. It's my trick.
the only thing you're giving up is either drinking or watching TV in the evenings, and both of those are of questionable value. So yeah, may as well work and make some money and enjoy wherever you are during the day.
Exactly. All right. So, you used to be a capital markets guy, and now you're a full-time nanny. So that's quite the transitions. We will very possibly see his grandchildren get in the car in a little bit. So when you see that happen, don't be alarmed. They actually are related to him. They are not being abducted from a parking lot. It's all good. All right.
Yeah. You can't I can't show any fear. They seize upon that. So
I'm sure. Yes. Okay. So to the business at hand, it's Jobs Week again.
What?
Every month. Every month we have Jobs Week, and every month it seems like we just had Jobs Week. So far we've had the JOLTS report that came out today. Job openings went from 6.88 million up to 7.6 million. But again, with JOLTS, you never know whether these are double countings, they're postings in multiple states for the same job. So anyway, but we'll keep an eye on it because the vast majority of the job opening or the jobs are for professional and business services. The hire rate went from 3.5% down to 3.2%. Its lowest was in 2011 at 3.1%. So our hire rate is pretty low. So that's happening. In other news, I mean, let's just dive into this, shall we? So, Bill Poulte, who has been the director of the FHFA, was named the Director of National Intelligence today. Thoughts?
I'm waiting for Rob on
Thoughts? Well, let's talk about this because after the election in November of 2024, we knew things would change from a regulatory perspective and from an economic perspective. And sure enough, we've seen changes there. And we've seen the Trump cabinet be formed, Trump 2, we'll call it. And changes have taken place and ideas have been battered around and so forth. And when Bill Pulte was nominated to run the FHFA, which oversees Fannie Mae and Freddie Mac, that raised a lot of eyebrows. Here's some, 35 or 36-year-old, maybe 37. Is he
He's
ready
that
to
young?
run? Yeah, he's 37, I think. Is he ready to run FHFA? His proponents said yes. We need a fresh voice. His critics said that the only reason he got the job was because he is a big contributor and he belongs to Mar-a-Lago. And so you had, it was a divisive choice, but a choice nonetheless. And I should add that any nominee pretty much is assured of being put into that position. The question at this point is with the resignation of the former head or former chief, former cabinet member, what was he going to do? So he's nominated. He's going to nominate Bill Pulte, which is a sure thing. The question is Bill Pulte going to run both the FHFA and this new post, or are they going to find a replacement for FHFA? Sorry about the noise in the background here, but if somebody the people who are in favor of this news today are saying, they're putting a positive spin on it, like maybe we'll really get somebody who really knows our business. I know people who have worked for Mr. Pulte and have worked with him, and there is room for improvement. I'll be politically correct there.
for the
And
people that work with him.
yeah,
The people that work with him need to improve, not him, of course.
no, no. Bill is positive in some areas. He's a positive in some areas, negative in others. I think that the feeling is that somebody else could have been appointed who would have handled things differently. Uh, as it is, if he does take this new post, maybe somebody will come in who's been in the trenches in residential lending for several decades and might be able to get some things done that Director Pulte has not been able to get done. And so we'll bring a better understanding to the job than what we have now. So we may see that happen. I don't know. But the critics of today's decision say that it's just to put Director Pulte in charge of the FBI or the CIA and so forth in our national security. The only thing Director Pulte has done is fly on Air Force One a bunch of times with President Trump. But he does have his supporters. Matt Ishbia, for example, UWM is a supporter of Director Pulte. I think the board members of Fannie Mae and Freddie Mac will support Director Pulte. So we'll see what happens. Fresh voices, right?
Well, did you see Rich Schwabinski's post on LinkedIn today, Rob?
I'm not on LinkedIn much.
Oh, that's right. I always forget that. You really should read his post today on LinkedIn, Rob. It ended with Russia and China are delighted. I was like, yeah, anyway,
Honestly, I think I'm more qualified than him to be intelligence officer because I know I've seen more Mission Impossible movies, more James Bond movies, and more Jack Ryan movies. So I
I like
think
Jack Ryan.
yep.
Kevin, did you watch this TV series, Jack Ryan?
I did that one, and I just watched the one on Prime last night, the latest movie. Not a fan of that one, by the way. I don't recommend it, but
Yeah, right. Good to
Yeah.
know. One of my favorite Jack Ryan scenes was where he had met this girl at a party on a beach, like a ritzy party. It was like one of the first episodes in the first season. And suddenly they hear this helicopter, and everyone looks up, and the helicopter lands, and the guy jumps out, and he's telling this gal who he ends up dating, but oh, I'm just like a logistics expert for
Yeah, yeah,
whoever.
yeah.
And they're like, where can I find Captain Ryan or whatever? And so he like raises his hand, and he gets in the helicopter and flies off. Anyway, that was cool.
You know what the difference between me and the two of you is that I too have seen Jack Ryan season 1 and 2, and I don't remember that scene at all.
I remember that's the scene where he meets his wife.
All right. Well, moving right along. Just a quick reminder, kids, that it is voting day. Please vote. We're not telling you who to vote for at all, ever. Yes, Kevin
Yeah.
voted. He's very proud of himself.
And I voted in Russian.
I was just going to say, don't ask what language, but go ahead, Kevin. Just lay it out there.
Only in the United States do they give you the option of voting in Russian. I'm like, I'm going to try that. Why not? Let's see what happens.
Oh my God. Okay. My only request, people, when you're voting, please, and I beg you, please do not choose positions like tax assessor or state insurance commissioner based on a party affiliation. Please check to see who might be qualified, who will do a better job, so we don't end up with more unqualified people in government. Boy, did you hear my brain trying to figure out a nice way to put that? There we go.
That's way of putting that. Yeah. Political advocate, don't select that person.
Oh my God. Anyway,
It's such a tough job
which one?
being a politician.
Yeah. But it's a lot better if you know what the hell you're doing.
We can
Well,
go
better
better
for us. Better for
Well,
us.
it's all you can just imagine what happens behind the scenes, and there's plenty of West Wing episodes and so forth that you can watch, but just the haggling that oh, well, you need to vote for my bill if you want me to vote for that new highway to go through your county, whatever it might be. Just the things that happen and the things that get thrown into these bills that make no sense given the original bill and so on. I don't think anybody goes to Washington, D.C. or a state capital hoping to do a bad job. I like to think that they want to do a good job and they want to help their constituents. It's just a matter of opinion of how best to help them.
Mm-hmm.
So I like to think that.
Well, for those of us who have spent a fair amount of time in Washington, D.C. and Sacramento advocating for our industry and the consumer, we know that it is a rough gig because there are so many people pulling you in so many different directions. But what I have observed, and this is just my opinion, is that he who arrives with the biggest mouth and the most money wins. And they may or may not be correct about what position is being taken, but that seems to be what speaks to people, which is why it is so critically important to be involved in our industry associations and hope to God that they are, actually a voice that we want them to be. So it is. And also the other thing too, I will never forget the first time I went to Washington, D.C., how shocked I was at how they didn't know anything about what we were talking about. Nothing.
Yep.
A lot of the staffers that we're talking to, they're young and they've never bought a house. They don't own a house. Maybe their parents lost a house in the meltdown. It's really tricky. So anyway, yeah. So anyway, people vote, but vote for quality and qualifications, at least on those things like assessor's office, that kind of thing. Okay.
Vote early, vote often.
As often as you can. Yeah. Okay. I'm just going to let it go. Next up, let's talk about the Fed. So Kevin Warsh, as we know, was sworn in as the new head of the Fed, replacing Uncle Jerome.
So are we done talking about Director Poulte's potential new job, which is basically a shoe-in because, as I said, every nominee, I think one withdrew voluntarily, But other than that, I think every nominee has made it. So the question isn't so much Bill Pulte. The question is now, where do we go with the FHFA? I think it would be a disservice to the entire mortgage industry if Bill Pulte is running both. So then the question is, well, that might happen, right? I mean, he might say, well, I can do both, Mr. Trump, Mr. President. But more probably, I would hope, is that President Trump will nominate somebody else to take over running Fannie Mae and Freddie Mac through the FHFA. And then the question is, who might that be?
I'm voting for Audrey.
Okay, so we really try to stay neutral on this show. We really do. We try to not go one side or the other, whether we're talking about the main players in the mortgage business slugging it out publicly or politics. But I'm going to step in this one. The guy who was just nominated for national director of national intelligence has zero intelligence background, zero military background, zero experience with any of it, yet he was nominated for that position. So my hope for someone who is qualified being nominated for head of FHFA, should he decide to not do both jobs, my hopes are not high. I'm just going to say. All right. So the question is, how many people just hung up because of that? But here we are.
Well, it's true. I mean, you look at the qualifications for Director Pulte to step into that role, and I heard one person say the closest thing that he has to any kind of experience is flying back and forth on Air Force One down to Mar-a-Lago. Maybe that's true, maybe it's not, but it is what
Well,
it is.
you know what? I may as well just go for it and alienate everyone, because I am just going to say, I know that this happens on both sides. So I'm not just being critical of this situation. I know this happens all over the place. So again, my plea for people in government to be qualified and know what the hell they're doing in the position that they have would be really helpful. But that's just me. So anyway, okay. Are you done now with this topic? Can we move on?
Yeah, I think it's noteworthy, but yeah, it'll be a developing thing unless
Yeah.
President Trump comes up with somebody right away, and then what, So
Who the hell
anyway,
knows?
all right.
I mean, yeah, who knows? I
Speaking
mean,
of appointees and nominees, who's next? Kevin Warsh.
okay, yes. Now we've gotten to Kevin Warsh. And what will the Fed do? So the next meeting is June 16th and 17th. And Kevin Warsh has been very vocal about his plans to potentially change the way the Fed does business and just reshape the entire thing. So let's walk through that a little bit, because again, it's controversial. I don't think we should come down on like, oh, I'm a Democrat, so I think this is good or bad, or I'm a Republican, I think this is good or bad. I think that it would be helpful if we could really look at these issues in a more neutral position. How'd I do? Was that pretty? Did I get there without?
No, you're not very neutral at all.
God. Okay. Anyway, so I think that there might be some value in reevaluating a few things. I think it's good to look at how someone's doing business and is it working? Is it not? Is there a better way? Experimental. I think that's okay. So let's just talk. And just to be clear, I don't really feel like I have an opinion on any of these ideas at this point. So I'm just going to lay it out there and then we can talk about them, because I know that Rob has some opinions. So first of all, he wants to slash the Fed's balance sheet. We've already gone from, I think we were at 9 trillion in 2022, and now we're down to about 6.7 trillion. But he thinks it's too much, and he would like the central bank to be a more passive observer than an active participant in terms of, really, am I boring you, Rob?
No,
Yeah.
I'm letting this sink in.
Okay. So anyway, so he thinks that the Fed should be doing less, and there should be less infusion into the market by the Fed. He wants to change the way you think about inflation. So, as we've said a zillion times on here, the Fed's favorite measure of inflation is 2% core PCE. He would like that to change to the Dallas Fed's mean, which is a whole nother thing. Okay. And then last but certainly not least, he is talking about getting rid of the FOMC's the guidance that they give. So you know how every other meeting they do the dot plot where they pull all the Fed members and they see, okay, what do you think in terms of rate increases, decreases in the next 12 months? And they publish that and they give some guidance on what they think they're thinking, et cetera. He would like to do away with that. So what say you, Rob Chrisman?
Well, so when he was initially nominated, uh, President Trump was in a squabble with Jerome Powell on the remodeling of the Federal Reserve or the new office building. Also, the fact that Jerome Powell wasn't lowering interest rates fast enough for President Trump's liking. Every president wants lower interest rates. The question is, and what we rely on the Fed to do is to take an objective look at that and say, are lower interest rates really needed? So as the nomination process has gone forward with Warsh, obviously we're now in a war with Iran. Oil prices have shot way up. It is believed that the average household spends an additional $450 a month now, based on fuel costs and based on the ramifications of those fuel costs. So if you're a politician looking at that and your constituents are spending another $450 per month, that's $450 that they are not spending on vacations, eating out, clothing, education, and so forth. It's not a good place to be if you're a politician. And Kevin Warsh has now taken Jerome Powell's place as the chairman of the Federal Reserve. It is a federal open market committee.
Right.
The chairman does not dictate where short-term rates are.
Right.
And the Federal Reserve does not set mortgage rates, which are set by supply and demand. So it is generally thought that given the war and given fuel costs, that the argument for, at this point, lowering interest rates, that argument has virtually vanished. And in fact, most investment banks seem to be pointing to or predicting no Fed interest rate changes in 2026. And if anything, we could start to see increases in 2027. So the money or the conjecture, the whispers in the hallway and so forth are saying we come out of this first Fed meeting in a couple of weeks, and if Warsh doesn't somehow strong arm a rate cut, what will the tweets be from the White House after that comes to pass? So that's being talked about out there in the rank and file. In terms of other things, though, that the Warsh can influence or change, the dot plot, the process of what the Federal Open Market Committee does, and probably most important, the balance sheet. Now, you might recall, I don't know, a month ago, 2 months ago, 3 months ago, time passes very fast as you get older.
And when you're flying 43,000 miles a month.
Right. President Trump instructed his agents to go out and buy 200 billion of mortgage-backed securities. Remember that?
Vividly.
In an effort to drive down mortgage rates. Well, that doesn't really, you could say, well, the Federal Reserve isn't the same as Fannie Mae and Freddie Mac, and they're not. And I made the quip, perhaps in my commentary or perhaps people I was talking to, how about the Federal Reserve just sell 200 billion of agency MBS to the Fannie Mae and Freddie Mac and call it a day? Uh, Nobody thought that was overly insightful, but nonetheless, if you look at the government, there are levers that the Federal Reserve can pull other than just changing the discount rate or the prime rate or the overnight Fed funds rate, um, including their balance sheet. And I think that done wisely, reducing the Fed's balance sheet can actually benefit things in the long run. Um, I think that the Federal Reserve, I think that would be okay if done wisely. Uh, with regard to the dot plot and the Federal Reserve, the Federal Reserve officials are out there so often speaking when we talk about the changes that might be made. One of the things that the Trump administration has done, for example, in fact, they just did it yesterday or the day before, not allowing the press into the press room in the Pentagon any longer. They've clamped down press access to the administration. I was thinking that Warsh might veto Federal Reserve speakers on the speaking circuit, which would not be good because the Federal Reserve, uh, the governors and so forth, the presidents of the districts, their speeches give a very good indication as to where their heads are in terms of policy. If he were to put a damper on that, if he were to say no more speeches, I think that would have a bigger impact than, you know, not saying we're not going to do the dot plot anymore, or we're not going to put our guesses out there every other meeting. So he does have he has been nominated, or he has been appointed by nominated and successfully so by the president. He does, I think, take his marching orders from the president much more than previous Fed chairman. And so he has, I think people are waiting to see what he does. But in terms of the Fed Reserve meeting coming up, I think that their hands are tied. They're not going to do anything. And then the question comes back, as we've been talking about, what else is he do? What else does he do that may impact the Federal Reserve? I think overall, in talking to my capital markets cronies out there, an independent Fed is very, very important, basically to everybody, um, unless you're the president of the United States, in which case you would like them to do exactly what you want them to do. But at this point, lowering rates is probably not in the cards.
Well, and actually, in his defense, he said that. He has indicated that there may need to be a rate increase versus decrease. I'm really interested to see what he ends up being, because he seems, yeah, we'll see. We'll just see. We have another little issue too, because we're so focused on oil, which, by the way, in the latest CPI headline, oil inflation was 40% of the CPI headline in April and 75% in March. So it is, and GDP's decreased to 1.6%. That second reading of Q1. And so definitely the war is having an impact on the economy. I would not want to be Kevin Warsh at this point. That is not an easy job, but we've got big, huge issues. And then we've got the national debt. So the only way to deal with that is to print more money, and printing money is inflationary. And then what? So it is complicated. There's no easy way out of this. And honestly, we all need to be just hoping to God he gets it right. Again, regardless of your party, wish for the best for him, because we need for him to do well.
Well, I still don't understand this thing with the Fed saying that they want target rate of 2%.
Okay, here we go. So, Rob, do you want to talk about this trim mean idea, or should I read what I printed from MBS Highway? What do you want to do?
Go ahead and read that.
Okay, here we go. There we go. A Kevin Warsh-led Federal Reserve could potentially place a greater emphasis on the Dallas Fed's trim mean inflation measure when assessing the appropriate path for interest rates. While core PCE inflation currently stands at 3.3%, the Dallas Fed's trim mean measure is closer to 2.3%, much closer to the Fed's 2% target. Trim mean attempts to get a better read on underlying inflation tendencies by excluding the most extreme monthly price movements, removing the highest 31% of price increases and the lowest 24% of price declines. Warsh argues that this approach filters out temporary distortions caused by factors such as tariffs, geopolitical events, energy price shocks, and surges in investment spending, which provide the Fed with a clearer view of persistent inflation pressures. If the Fed were to place a greater weight on the trim mean measure, it could strengthen the case for interest rate cuts once a temporary disruption fades and economic conditions stabilize. They go on to talk about the pros and cons of this, and it sounds like it is good in certain situations, but not great in other situations, and could very well end up with a similar situation where it doesn't catch inflation that's sticking and it would be behind the curve. So, again, I don't have an opinion on this. I don't know whether it's better, worse. Should we try it? What do you think?
So my opinion is that, and then I'd like to hear Kevin's. My opinion is that there's, if I can't maintain a speed on the highway of 65, if I have to go 85, is that my problem, or should I rally the government to raise the speed limit to 85 to accommodate me?
Definitely that.
You can change the playing field. You can change what you look at. You can change metrics based on what you want to look at. If you're out there dating, you might only want to, dating is a bad example, but basically I know if I'm sitting here in a Costco parking lot, I'm going to go have to get gasoline. I know that if I go to a gas station and they cap you out at $100, I'm going to have to go again. I know that when I go to the store or I go to a restaurant, I'm paying more. And you can say, let's trim off this, let's trim off that, let's use this metric or that metric. The fact of the matter is, we are in an inflationary time.
Yeah.
And people know that. And changing the yardsticks or changing the playing field, changing what you look at, doesn't matter to a family of four who, go to Safeway or the supermarket, and suddenly they're spending, $200 a shot versus where they used to spend $170 for the same groceries. So, it's not a situation where, I think it's going to matter a lot. What I tend to think about is that family who was going to take the extra $400 they're spending every month on fuel. They were going to use that for a vacation, or they were going to use it to buy school clothes. Now they're not. The economy gets dragged down because everybody's putting the stock market's all excited about Nvidia and these other AI stocks. The fact of the matter is that if individuals are spending less money on things that they prefer to spend money on, that can drag down the economy. The local restaurant, for example, isn't seeing as much business. But whoever makes clothes, whoever makes art, whoever does certain things out there that help our economy, they aren't seeing the business come through because people are spending their money at Exxon and ARP and Chevron. That can have a drag. That can be a drag on the economy, and in which case Warsh may have ammunition to say we need to lower rates to stimulate the economy because people aren't spending money. So you're right. There's a lot of moving pieces. It's not an easy discussion to have. It's not easy decisions and so forth. It's not cut and dried. But we are in a pickle. Now, the wild card, and I'll end with this, the wild card is suddenly we have peace in the Middle East. Israel stops. Iran and the United States stop. Oil starts to come back down. There's not a lot of disadvantage in that scenario. So who knows what might happen? We might be one tweet away from peace in Iran.
Well, for me, I'd like to see it in writing, the actual agreement between the two countries versus a tweet, but I get your point. So just for fun, I was just interested and took a tiny little dive into the history of core PCE to see like how much has it been at 2%? And the the core PCE is averaged 3.23% between 1960 and 2026. So we don't exactly have a very strong track record at 2% PCE. It's
Nope.
our goal, but it's not something that we've achieved much.
We've
I also,
only achieved it during COVID, pretty much.
well, I thought it was interesting too. The highest recorded was in 1975, 10.22%. So we're freaking out right now. It could have been worse. The lowest was during right after the meltdown. And anyway, and currently we're at 3.3%. So anyway, to your point, it could all change the second we get some news out of Iran, as we have seen over and over, you know, that the market has just, it is absolutely a puppet when it comes to how it's moving. So if we get some tiny little sign that there's some progress in the negotiations, we're close to peace, oil prices go down, the bond market does better, then it all goes the other way, then it all, you know. So anyway, I'm just over it. I just lock your loans so you can sleep at night. Your clients don't hate you. And actually on that note, can we just take a moment and remind you, if you pre-qualified someone for a purchase in say February, you definitely need to go back and have a conversation with them now based on what their new payments would be with the new rates, so that they are not caught off guard if they go into contract all of a sudden and then they have somehow not noticed that rates have been going up. So make sure you're doing that on all your files. Right, Kevin?
Well, no, I don't do it all because I have to talk to them about how much prices have gone up since February also. When they could buy a house for 1.6 and now it's, closer to 2.2.
Are values in the Bay Area really going up?
Insane in San Francisco right now. It's just absolutely insane.
I've got
Is it
multiple
all?
offers on most everything.
It's all NVIDIA driven, all
No,
AI driven.
not at all.
Yeah, it's interesting. My clients are not working there, but they're making good money.
They're not even in tech. No, I mean, average people are buying houses right now, which
Yep.
is great. And actually, I read this article and somebody made the point that, people, the narrative for the last 2 years has been rates are coming down, right? And
Mhm.
now that has shifted. And now the narrative is no longer rates are coming down. It's holy crap, are they going to go up to 7% again? And I better get in now before that happens. And that in some people's opinion, is driving some of what we're seeing, which is, okay, we really do need to buy a place. And then we've got Cotality, who came out with their home price insights today. Their forecast for the next 12 months, and this is nationally, so you have to check your neighborhood, 5.3% increase in prices is what they are forecasting. So
Wow.
the last time we had Dr. Selma Hepp on the show, she had told us that they were going to be reworking some of their models. And so I just scheduled her again in, I don't know, I don't remember whether it was July or August, but anyway, so we will be able to quiz her on how that went and what went into that modeling, and also see how we're doing on their projections. So yeah,
That's interesting. But as you guys know, all real estate is local,
totally.
and if you go to Texas, it's like catching a falling knife there. They have more inventory than ever.
Wow.
Um, Florida, plenty of places for sale, although a lot of people still want to move there. But yeah, in some places like the Bay Area, Nashville, all kinds of building cranes in Nashville,
Hmm.
Tennessee, Franklin County. So other places, not so much.
Well, our understanding from our conversations with various economists is the places where there was space to build. Rob, I feel like we should have given you some sort of espresso shot before we started. I don't know, like,
I should have gotten the Diet Coke pizza combo meal at Costco.
yeah, or a B12 shot. I don't know. Well, I mean, and in his
Well,
defense, he is jet lagged, so he did just get off an airplane last night from which
Yeah.
place,
Anyway,
Dustin?
where were you?
well, that was only Southern California, but I was only in Southern California for a day. Before that, it was Portugal.
There you
Oh,
go.
yeah, that'll do it.
That could account for
So
some of this, but could you try and keep a lid on it so it doesn't seem like we're boring the crap out of you? That'd
you're
be great.
not. These are issues. The issues that you talk about, we're talking about now, and that you always seem to hit on your show, are very, very pertinent to originators in general. And originators do need to stay abreast of these things, and you guys do a good job of hitting on them. But there's not even a but. The issue that people have to deal with, of course, is there's no easy. The issues that you raise are issues week after week, month after month. It's
Yep.
problems that originators have to grapple with, so they should at least have a rudimentary knowledge of what's going on out there.
You know, when we started doing this over 6 years ago, 51 weeks a year, every single year, we did not have some sort of expectation for where we were going with it. We had no plan. It was literally just this grassroots just thing that we put together during lockdown. But it really has evolved into this was there at the beginning, which is there is so much news right now, and there's always so much news these days, and everyone thinks they're an expert. Everyone thinks that they've got a little bit of information and now they understand something or know something. And the reality is, most of them aren't reading past the headline and they have no idea what they're talking about. So I believe, and it sounds like you agree, that we need to understand what is below those headlines and make sure that we're able to explain to our borrowers and our referral partners what is really happening out there, because otherwise they're scared to death, or they think that there's a bottom falling out of the market and they should wait, or they're thinking that rates are going to be 4% again, which I literally just like verbally slap the crap out of people who start with that crap
I
again.
get that with people thinking, well, should I take a 5-1 arm? I'm like, oh my God, no. Because like, yeah, you can get, something in the fives right now, but 5 years from now, you're looking at a whole lot higher rate and you're going to be kicking yourself for passing up on something in the sixes for 30 years.
It's we do hear a lot of the little pundits out there pushing those arms, and to me there isn't enough of a savings for the average
No.
consumer. I mean, if you've got like $1 zillion in an exit strategy, fine, knock
Yeah,
yourself
you
out.
got, well, yeah, or if you have an exit strategy where you have to get rid of that loan, and so I've had people doing condo conversions or that kind of thing, and it's a temporary loan that they can't hold on to it very long anyhow.
Right, that's
There,
different.
yeah, you need a 5-year arm because you're
But
not.
we also know, for any of us who have been in the business for more than 30 minutes, it is it is a oh my God, I just got distracted because somebody just popped up. Manny says he disagrees on the arms. So, and I know a lot of people do. I totally get it. I know people like them, but again,
But
like,
they work really well in a downward mortgage environment where we were from the 80s until the early 2000s. We are now in a rising interest rate environment. Thus, how many trillion dollars in debt? We are going to keep rising until that gets fixed. And
so
then once
Manny,
that fixes, it usually takes 20 to 30 years to fix that.
Manny, give us an example of people that you're doing arms for so we can talk about that. That'd be great.
I'm with Manny.
Okay, tell us, Rob.
Yeah.
Well, I don't have any loans to tell you about.
I was just gonna say, when was the last time you did a loan again?
I could make up a story about a family of four that I was working with just this morning,
Yeah.
and they're looking at a home in Petaluma, Northern California, and it's got a white picket fence and it's got a great school district. And I had it all worked out where the principal and interest, everything was good. They qualified, and then they went to go get insurance, and insurance was $1,500 a month, and it blew the deal out of the water. And I said, well, let's take a look at a 5-1 arm, because at the loan amount, They were about 6 3/4. I could get them into a 5/1 arm at about 5 3/8, 5.5. And that savings almost made up for the cost of their insurance, and they're able to qualify. They're able to go forward now. And we're going to fund next week. How do you like that?
Okay, well, so since I know that the Petaluma City Council outlawed white picket fences and there's an ordinance against them, I know your story's total crap, Rob Chrisman. Okay, so Manny, on the other hand, does have on the ground information about this much more than I do because he seems to be pricing them regularly. So good for you, Manny. I think it's good. So he says, home buyers, I offer all programs and payments, which is good. We're 5/1, 5-year CMT plus 2.5 margin, 1% run cap, and he's currently 5.5% on a 5-year introductory. So anyway, so again, I do hear people who are doing them out there. I just wonder about 5 years from now, just like Kevin does. So anyway, oh, here we have Elena. Okay, 5/1 rate, 2 qual, no way it's better. DTI at 30 year. 5/1 plus.
Yeah, you got to
Oh, the
qualify.
qualification. Yeah.
Yeah, it's higher. It's
Qualification.
crazy. The other one too is here's my trick. What I tell people, it's like, is it a 5/1 or a 5/6? And most lenders are offering 5/6s right now. Why would a lender offer a 5/6 when they normally would offer a 5/1? Well, the 5/1 was when rates were going down, they would do the 5/1, so at least they stuck that rate for a whole year before they adjusted down. When the rates are going up, the lenders want to take that higher rate faster. So they want the 5 6 months, so it's adjusting it every 6 months. The lenders are telling you they know rates are rising by doing 5/6s versus 5/1s. That's
How do you really feel?
case.
How do you really feel, Kevin? How do you feel about that?
I just look at where the market is. It's where it's going. If you put somebody into a 5/1 and now 5 years later they're screwed. I have someone right now, she's dealing with it. She's got a 3.75 on a 5/1, and she's debating now whether she's going to sell the property or go with something in the sixes. And it's like,
So Manny says, why do they have to refi in 5 years? Catch a refi wave in the next 60 months when rates are better than 6.6%. But my point is, after 36 years in this business, we don't know what rates are going to be in the next 5 years and whether they will ever be lower than. So I don't know. Again, this is a personal thing. Like, we are all making these decisions separately based on our experience and our clients.
Yeah, look at the interest rate chart. We are in a point now where rates have, even if they're higher now, they're still lower than they've been in years.
God, I don't think I've seen Kevin this fired up about a topic in a while. Good grief. Wow.
Yeah, he's been out. He's been out for a while. He saved up a lot of this venom and angst.
Yeah, that's good. Let it out. Go ahead and let it out.
There you go.
Okay, so I am seeing a lot of discussion about credit card delinquencies and how terrible they are, and we're having this huge surge. And I just wanted to state, for the record, that in 2019, credit card delinquencies were at 2%. In 2021, when we had stimulus and forbearance, they were at 1%, and today they're at 2.5%. So certainly they're off the 1%, but they are not horribly off the 2% that we did see in 2019. So I'm not saying it's good. I'm just saying that the sky hasn't exploded yet. I mean, the jury's out. It could happen, but there you go.
You bring up a very good point there. And we are moving here, so you may hear noise. If some statistic, if foreclosures in a given county go from 0.1% to 0.2%,
yep.
What shows up in the newspaper? Oh, yep. Foreclosures double.
Yep.
It's like, really?
That was
so yeah, you got to be careful. Get beneath the headlines, as you pointed out a half an hour ago.
The foreclosures up 175% headline from a number of years ago, which led a lot of consumers to think that we were going to have another meltdown and that they should not buy. They should wait because they were going to get one hell of a deal on some place once the market crashed. What that headline did not tell them was that we were going from a foreclosure moratorium where they were illegal foreclosures. And then they started with foreclosures again. And we are still 6 years out of lockdown. We are still at historic lows on mortgage foreclosures. I mean, and again, the FHA, we know that FHA delinquencies are higher than conventional and non-QM. However, there is, even that's a whole nother thing. So overall, mortgage delinquencies are really in check. And again, we keep an eye on them because that doesn't mean it will stay that way. It's just at the moment, be careful of those headlines, but know that your borrowers are watching those headlines and listening to the headlines and probably not listening to anything beyond that headline. So you have to educate them. That's why it's so important that we know these things. Yes?
Absolutely.
Yeah. Okay. So okay. Rob, your friends at Stratmore made us aware of an emerging threat. I'm reading from your blog. And so let's talk about that for a minute. The FBI recently issued a PSA about Cali 365, which is a phishing toolkit that cyber criminals can subscribe to. And you wrote it's like a Netflix for hackers that gives them everything they need to target Microsoft 365 users. It's been active since April of 2026, so a month ago, and has already hit hundreds of organizations across healthcare, finance, education, and government. And the reason I'm mentioning it today is we are, as LOs, being targeted all the time. I'm getting more scam emails from NMLS, but it's not really NMLS. And we've talked about it regularly on here, but we're going to keep talking about it and remind you that you got to be careful. So this thing, they are tricking you into thinking that you're getting some code from Microsoft Outlook, OneDrive, SharePoint, one of those things. And it's very familiar to you. And then you put the code in, you click in it, and guess what? You just gave them everything. And it obliterates multi-factor authentication and all of the checks and balances that are built into that system. So be aware. So thank you for that little public service announcement, Rob. Yet another thing for us to be on the lookout for, and also for you to talk to your clients about, because they have businesses and they have things that put them at risk. So if you can share this with them, that is really smart, and it makes you more valuable than, somebody in a call center somewhere. God, Rob totally is so agreeable today. He's yawning, he's tired, he's jet
Well, no,
lagged, but
I agree.
agreeable.
I agree 100%.
No, it's
They
self-service
can,
crap now.
as people, how they can add value. Originators can add value. It's like, oh my gosh, AI is going to take my job away. Oh, a call center in the basement in Michigan is going to take my loan away, and so forth. But there are many ways that people can add value to other people, and it's important to focus on that. And to your point, Audrey, I mean, this is one way to do that, to say, hey, send an email out to your clients, say, hey, this is what's going on. If you have some questions, let me know. I'm here to help. It
Yep.
doesn't have to be necessarily mortgage related. I mean, here's something, you're right. I mean, a lot of small business owners out there can use help, can use somebody in their
Exactly.
corner, and you're
Yep.
somebody in their corner.
Exactly. Rob,
But that
Bob,
said, I just, every week I receive some email like, oh, my benefits have changed. Well, I don't even have benefits, you know.
what are
But
benefits?
if I'm,
Oh,
I would
your
be,
benefits.
yeah, I would be worried if I had an older parent, in their
Yeah.
70s or 80s, who were active online on their computer, and they receive, hey, your Social Security benefits have changed. Click here to see. It's like, you know, you
Yeah.
just can't.
Well, I had one where because I was traveling to England, I had to get my English visa. Now it's a new thing, and I opened up a site that was not the official site, and they had covered it up pretty well. All they got was my passport number, which turns out that wasn't a big deal. But they were hit. It was funny because I figured out it was in the wrong site when they wanted $125 for the visa, and I go, wait, it's only like $15 or $20. And then they started offering me a discount if I click now. I'm like, there's no government agency that would ever give you a discount for clicking now.
Well, yeah. Rob, can you briefly walk us through the changes that are potentially, well, that are coming to the Basel III capital requirements for banks and what impact that is going to have on what types of loans they're going to do and what they might do with regard to market share?
So I think what people on this call need to keep in mind is that our MBA, NMBA, whatever organization you're part of, they disagree with a lot of what's coming out of Basel. You know, the basic thing is, why should a little town in Switzerland dictate our multi-trillion dollar mortgage industry and how much banks can hold and so forth? We understand the basic premise of Basel is to protect banks or other financial institutions, investors from overextending themselves, and they assign a risk weighting to the mortgages and the mortgage-backed securities and the servicing and so forth, whole loan versus MBS, et cetera, et cetera. And we are saying, look, these aren't as risky as you are telling us that you say they are. And that's the basic premise about the changes that we are trying to make in this. Right now, I think the last time I talked to Bob Rokesmith, the Basel is kind of on their back foot a little bit, to being diminished a little bit, and uh, I think that good things are in store for the changes that may be made, and by good things, meaning that banks will be told they're not as risky. They don't need to hold as much capital to invest in mortgage-backed securities, which would be a good thing, which means they could invest in more mortgage-backed securities, which would help the supply and demand equation that
Yeah.
impact borrowers.
But also something along the lines of the certain capital instruments that they've used are now going to be counted differently, and it will give them more leverage and flexibility around what they're able to lend, right?
Right.
I don't know how clear that was. Was that clear?
Yeah, it's a once again, just like everything else we've talked about on the call, it's a complicated situation. I think the basic thing for listeners and viewers to keep in mind is that the changes that our trade organizations are fighting for are would benefit us as an industry. And so we should be rooting for that.
Yeah. Yeah. No kidding. Well, yeah. Okay, just a little reminder, kids, that any decision that's made by AI is you are personally responsible for with your license number.
Not me.
Okay, other than Kevin, well, and Rob, because he doesn't do loans unless he's lying about some loan in Petaluma with some fake picket white fence and white picket fence. Anyway, bottom line is be careful of what you are putting out into the world, because you are liable regardless of whether the computer told you it was okay or not. I just feel like that cannot be said enough. And so also NBA came out with their mortgage applications, and although rates are up and purchases were flat week over week, we're up 5% year over year over last year,
That's
despite
all me.
the interest rates. That's all you.
That's all me. Yeah.
All right. Well, thank you, Kevin, for that incredible number. But my point is, there's business out there. People do have reasons for moving, buying, selling, refinancing, etc. And the current situation, although it's volatile, if you really think about it, our business is usually volatile. There's always something going on, whatever it might be. It's always something. Have you noticed that?
Mm-hmm.
I mean, my friend from high school who I lives on the East Coast, and I talk to her about once a year, pointed out after 20 years of us having this conversation that every single time she'd ask me how business was, I'd use the word crazy. And so we all just need to remember that crazy is normal in the mortgage business, and that's what we deal with. So go get a loan, make sure that you are taking care of helping people, because that's what we're here for. Rob, is there anything else that you'd like to add before we wrap this thing up and you can go take a nap?
No, I'm good. I'm good. I'm looking for a McDonald's to have a bite to eat.
Oh God, that's I don't even know I don't know what to say to that. All right. If I thought he was kidding, that'd be great, but I know he's serious. All right. Thank you so much for being here, jet lag and all. And Manny, thanks you for your support on the arms. And
Just
yeah,
way of thinking.
and Manny, we support you too. Whatever is working for you and your clients is just fine as long as we're just thinking down the road, what's going to happen next so that they're going in with all their eyes open, all of them. So have a great week, everyone.